Day traders, I trust you are well, and welcome to Price Action Profits, where you improve your trading skills and you basically make more money trading price action. My name is George Nyabaza, and it is my pleasure to present this week's best trade to you. Now, this is a trade I took yesterday, UK Brent crude oil, and yesterday was the 6th, and I took the trade here and I exited here. So these are just markers pulled directly from MT4. But let me take you through the rationale behind it so that you can see how I think or how I thought through the whole market unfolding until I took that last trade. I'm going to mention a few things about price action trading, measured moves, leg one, leg two, etc. If I mention any technical term that relates to price action trading that you don't know of, then I suggest you go back and watch the very first video that I did on price action profits, which was first week of September, last week. So just go back and do a search, price action profits on the 1st of September. You will see that first video that I did. There's a lot of terminology in it, which I think you'll benefit from. So how did I end up taking this particular trade, which was a pretty good trade? I was happy with it on a Friday. Way back here, as I got into the market, and if you have a look, we had a failed breakout at this stage above what was the high of the day at that stage, high of the Asian session. And then later on, the market created a nice, double top within here. But before that, enough information was being presented to me by the market to show that the bears might just be strong. Here's what I mean. At this point, we had double top. Market went up once, twice, so that's a double top, and then acceleration down. Now, this double top was taking place in the European session, the UK session. But if you also look to the left with another high of yesterday here, so technically, actually, the wedge top, 3 pushes, the market tried to go up to higher prices, but failed. So the market went up once, twice in here, and 3 times. So wedge top, a little another wedge within here, 1, 2, 3. So 3 pushes up, but acceleration from a double top or a wedge top, good for the bears. And then they tested the low of yesterday. So this red line is my marker for the low of the previous day. Let's just get the laser pointing. So that's low of the previous day. I just use a red line to mark for me the low of the previous day. So we had a perfect test of it. Bulls came up, but the bulls failed to accelerate up. So this presents a lot of information for me. Had the bulls been strong, would have had consecutive bull trend bars, and who knows how far the market would have gone. But the fact that after a beautiful reversal by the bulls, we just go sideways, indicates to me that bulls are not that strong. Then they did accelerate up, tried, but failed to get above the high of the day. Again, we have a double top, lower high double top right here. And from that lower high double top, this double top is lower than that. We have another lower high double top, and bears accelerate down again. Bears had a chance to try and break beneath here, and they failed. So now we're in a trading range. Trading ranges are absolutely beautiful. Some guys trade trading ranges. I don't trade in trading ranges, but I use them to get information. And the information I'm getting is that the market is in breakout mode. What are the chances that the whole day is going to end up like this? Chances always exist to get small days like that, right? But the chances are pretty low that we're going to end up in a small range the whole day. There will be a breakout of sorts. If we don't get it today, we'll get it tomorrow. So we have another attempt to break out above here. But have a look at this. The bears' strength, they failed. The bulls have no strength whatsoever. They're just small candles, tails, high test, low test. But, they failed to get above the high of yesterday. Again, get a micro double top. Now, what's interesting, usually when you get big news announcements like non-farm employment, most markets react. Crude oil didn't react at all. Okay, just did this usual stuff in terms of what was happening in the market, micro double top. That's what took place if a failed breakout above this. And the bulls had a chance. They were strong, they would have accelerated up. The bears were strong out of the news reaction, they would have accelerated down. So nothing happened, micro double top. So now I'm thinking, hang on a second. I've tried so many times, so many beautiful patterns that the market is trying to do. Now, if the bears are strong, we're going to accelerate down. We don't accelerate down, but we have another failed breakout, tails on top this time. Now I'm like, okay, the bear is about to do something. Get a nice bear candle, good for the bears. And I'm thinking, okay, if the bears are strong, between the high of this pattern and its low, the low of this doji, if the bears can break out beneath that, they have another chance to test the low of yesterday. And maybe on the third test, they might accelerate down. So I like that candle. Let me wait a little bit for us to get just a little bit lower beneath the EMA and beneath the bodies of this doji. And I get that bear candle. I said, okay, I am going to take this trade and see if the bears will get us down here. So I took the trade. You can see the marker there. And as soon as it failed, I managed my trades on failure. As soon as it failed, I got to here and I closed. Break even, not a problem. So the bears didn't do what I was going to do. And the bulls who failed that did nothing at all. We get back again. So at this point, we have a failed breakout. That's what that means. Failed breakout, high of today, HOT over the high of today. We have a micro double top. That's a micro double top. That's a micro double top. So double top made up of 2 candles or 3 candles compared to this large double top that we had here. We have a follow through, another failed breakout. So the micro double top followed through by the bears, another micro double top, which is a failed breakout of the high of today. So I'm thinking, the bears have got strength. They've created a double top reversal here by their micro double top. That micro double top, that micro double top creates another double top here. And here we still have a wedge top, 1, 2, 3. We have a lower high double top. We have wedge tops here, lower high double top. So there's so much stacking and nested patterns that are supporting the base. So the probabilities are increasing that they will accelerate down. That's why I took this first trade here, hoping that we get a bear breakout below the low of today. That was the target, that if the bears are strong enough, they're going to accelerate down, and the target is the measured move. There's a measured move of this little pattern here, this small trading range. Target was to get to the measured move and a possible test on the low of yesterday. But it failed. As soon as it failed on the bull low test, that got out of even. So the thing about price action trading, you've got to see the pattern, got to execute it. And once you've executed, you've got to manage the pattern. Sorry about the noise, guys. Thought this was a quiet room, but hopefully it doesn't disturb you much. So we have a failed breakout and I exit my trade. So I'm like saying, well, let's see if the bulls are strong. Bulls do nothing. We get back to these levels. Micro double top. Bears failed to accelerate. Now we have another stronger pattern. Micro double top. It's also within its failed breakout of, this was the failed breakout of the high of today here. Even the failed breakout of the high of today. Now, 3 attempts to get above the high of today is a form of a wedge pattern. 3 attempts. 1 failed, second time failed, third time failed. And then within here, we have micro double tops as well. So the failed breakout, high of today, plus we have a higher high, double top. Okay, Josh, slow it down. Okay, so we have a double top here with the high of today and a micro double top. So that's a high of today. That becomes high of today. We have a micro double top here. Okay, so 2 candles separated, micro double top. We have this whole pattern is a failed breakout in any case of the high of today. And this pattern is a high, high double top, micro double top. And it's like, what is George talking about? So here's the point. You don't have to remember everything. You have to understand what is taking place. The key thing that's taking place is that the nested patterns, the pattern after pattern after pattern, is showing that the bears are strong. They are preventing the bulls from breaking out to higher prices. So if you see bearish price action, you've got to find ways to get in. So now I have the bears coming down, and I'm thinking, okay, happy to jump into the market, but that was a problem for me. That's where I got stopped out. And I want to see if the bears are strong enough to get beneath that. If they can get beneath that by a little bit, by a tiny whisker, a cat's whisker. Is it a cat's whisker or cat says cat whisker? They can get just beneath that, then I am happy to take the trade. So we have a bear breakout below the micro double top. That's a micro double top here. Beautiful bear breakout, the best breakout we've had. That was decent, that was decent. But since the news, most beautiful breakout that we have. And I'm thinking, if bears can break out beneath here, look at the measured move. Now the measured move takes us below the low of yesterday. So it's even a more powerful motivation for the bears to break out. They've built up all this force. If they can break out beneath this low, the measured move is to get to the low, or is to get here, which is below the low of yesterday, which means that there's an opportunity to accelerate down. So I'm thinking all of this at the back of my mind. I'm thinking it's a Friday, and I put in long hours Monday to Thursday. Friday is a half day. I'm gonna be going soon. Things are not happening, but let's see if it sets up. I've still got a couple of hours before I have to leave, but I'm gonna take a trade. So I'm in there watching, waiting. Get the dojo. I'm like, oh, okay, maybe the bulls will fail. But then you got this candle here. As beautiful as it comes, it's not an outside candle. It's a beautiful trend candle, small tail on the top. It's in the right place that I've been waiting for. As soon as I saw that, get in to the market. Once you see it, you've got to execute. Execute it. And what I'm looking at is if the bears are strong, they'll get to the measured move. If they're not, well, we manage to trade, get out a break even, whatever we do. Okay. Now, I'm not talking about stops today. You got to decide where to put your stop. You can put your stop at the top here, put your stop in the middle of the trading range. You can put your stop measured move above this candle. Many ways to manage a stop. That's another different conversation. Got rewarded by this breakout, and I wanted to see whether the bears are going to have strength to break out beneath it. They failed here, but they were successful enough. So fantastic. Bear breakout below support, that key support. And the bear target was this measured move. They got to the target, started to dilly-dally a little bit. And we had 5 o'clock news, my local time, which is 4 p.m. GMT. I think, yeah. 5 o'clock news, if you have a look on Friday, there was an FOMC member speaking red news. So that was a bit of a concern as well for me, because I have a rule with red news. Either, that's my alert to not waste time. Red news, I'm either out of the market completely, or if I'm in a trade, I manage to trade tighter with my stop. So all those factors are going through my mind. Red news, Friday afternoon, etc., etc. So the red news come, I said just to trail my stop a little bit tighter. We go to the measured move. Usually the measured move, if the bears are not strong, the market can reverse. So by that time, I think I had my stop here tighter. Had a bit more acceleration, and then we got to this level. I've been watching this level the whole day, wondering. I don't trade fundamentals, I look at price action. So the charts were showing me there is a key level here, which is the low of both 2022 and 2021, a huge level. Everyone is watching it. So if the bears are strong, they're going to get to it, test it, smash through it, like we did here. It might happen immediately, it might take a bit more time. But at the same time, we've got the news announcement that is coming in place. So all sorts of factors playing in. But we accelerated down, we got to that level. And just before the news, I said, okay, I'm done. I gotta go. Friday, done. Exit on here. So I just closed the trade. I didn't even manage to decide to manage it at all. So that's the trade that I wanted to show you guys. Price action profits, where you improve price action profits extract wealth greater and faster and quicker and more fun from the markets using price action. My name is George Nyabatsa. If you still unclear about some of the terms and terminology, like I said, go back to the video that we had last week. Thank you, guys. We will see you again next week, where I will look at one of the trades that I've taken and just show you my thinking and thought patterns, and I hope you will enjoy it. Take care and